Welcome everyone to a live webinar of Admiral Markets. We're going to take a look at live trading, live setups, live analysis of the Forex market, commodities, and stock indices. All right, before we do that though, be aware that this webinar is shown to a global audience, may not be suitable for everyone. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more info on that. Also, please be aware that trading foreign exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, a bit about this webinar. We're going to take a look at fibs and trend lines specifically. Those will be the two tools in the front and center of our attention. But in general, we do take a look at these 4 steps when making our analysis and when looking for trade setups. First of all, I'm looking at defining the trend and looking where the momentum is heading. Those 2 things are very important concepts to understand the market structure. Trend, of course, giving the overall direction, momentum giving the current direction and the strength of that push or correction. Then, second thing is to take a look at, now that we know the direction I want to trade, we're going to take a look at how to trade it, what are we looking for, what kind of pattern or pullback could be interesting to trade. Thirdly, are there any filters that could stop the trade, like a news event or support or resistance that is nearby? And last but not least, after that is done and everything seems good to go, I mark basically the decision zone, the level where I want to wait for price to get to. Then I establish what I want to see. For instance, at the 50 fib, whether I want to take the trade right at the 50 fib, or am I looking for a candlestick pattern at the 50 fib, or a break of the trend line before trading this particular setup. And then I calculate what that reward to risk is after establishing the trigger. And if that reward to risk is positive, or basically compensates the risk involved with taking that trade, then I have a setup or trade going, and the next step would be trade management. All right. Now, just a bit before we take a look at the live markets, of course, as always, just a quick look at the calendar. We already had an Aussie interest rate decision that saw the rate fall from 1.75 to 1.5% as expected. Earlier this year, we already had a quarter reducement, and basically interest rate of the Aussie falling as the emerging markets are struggling to find their feet or their ground. And we expect perhaps another rate decrease actually on the pound on Thursday. Bank of England already hinting kind of to a potential rate decrease from 0.5 to a historic low of 0.25 as far as I'm aware. And that, of course, should indicate more pound weakness if such a decrease were to happen. So that's something we can discuss in the charts. The pound is in a contracting triangle. It's in a correction at this moment, and the rate hike could send that lower. If there is no rate hike, perhaps we will see a neutral or positive effect for the pound. That will depend on Thursday's announcements and statements and rate decision. So the pound could be in a big consolidation until that moment. I don't think we're going to see a big movement on the pound before that news event. It is a big one, and I don't think the market is going to make any decisions before that news event is behind us and that news event is out of the way. All right, so that's just how it goes. It's just indecision at this point because no one wants to commit to anything at this point with such a big question mark in front of us. All right, other things that are interesting this week is the NFP, but you can read more about that when you go to our website. In fact, just go to admiralmarkets.com, click on analytics, click on fundamental analysis, and you'll have an overview basically of what's going on this week. We're going to be releasing this on Mondays afternoon. We started last week. This is the second one. We had a short break the last few months, but we're back with this. So if you want to take a look what's going on, you can do that on our website as well. So today, let's continue and take a look at the charts. Let me grab the euro dollar. First of all, thank you for your patience in signing up again. I know that there were some problems with signing up, and that was solved yesterday. Thanks for that, for the heads up regarding that problem, and we managed to solve it. And I see that some of you managed to join in the meantime. Some of you probably not. So just if you're looking at the recording, the sign-up sheet is working again for these webinars. So everything should be good to join again. Alrighty, well, Fibonacci and trend lines is our focus for today, and I thought about that topic actually when walking Saturday during the weekend. It's always good to, I think, just go for a walk, and walking is healthy in general. We love to walk. We like taking a tour through Prague and hanging, being the tourist, although we're not tourists. But that's the beauty. If you live in a beautiful city like Prague, then you can pretend you're a tourist for a day and enjoy the sights and the tours. It was a beautiful day. It was sunny, perfect temperature for walking along the river. 27, partly sunny. So it's just great to escape the computers and the indoor and get some fresh air. Get a breeze through your mind and see things from fresh perspectives. And on almost always when I do that, you start to think about unconsciously, maybe even about the next week, what you would like to, maybe what I would like to show you, for instance, like what I did now. I was thinking when I was walking that how when I started out trading, actually fibs and trend lines were my core focus and were really the bread and butter of my trading. And after that, I started to kind of add moving averages, candlestick patterns, an oscillator. And I think that's good. I think that, you want to, basically it's a constant, rotational, circle basically. You add things, you remove things. You add things, you remove things. You want to not necessarily not look at new things, but you don't want to only add stuff. You don't want to only add indicators. You don't want to only add, because then eventually, of course, things will be too complicated. Things will be too messy. So it's a balance where you want to keep an essential mind. You want to only have the things on the chart that really matter, and remove the things that don't. So you can add things, but you also want to keep in mind that you want to remove things. It's the same like basically when you have your household here, you have tons of papers, and eventually you could be adding papers, but you want to remove them as well. Otherwise, the whole flat will be cluttered, right? So that's the same with our trading plan. But the two things that have survived all those kind of transformations that I also look at other, throughout all those years, I've looked at multiple things. I've done testing and research, of course, on many things, as you can imagine. But the two things that really survived and always managed to stay in my way of trading are trend lines and Fibonacci from the very beginning, almost actually to the right just now, to this moment. All right, so that's why I wanted to focus on those, because I think that it's a grand way of looking at things. It's a simple way of looking at things, and to provide a lot of value. So, with no longer ado, how to use it? Well, first thing, trend lines. By coincidence, there could be a good blog for you to look at if you want to know some nitty-gritty about trend lines. I would recommend to take a look at the blog, take a look at analytics, then go to Trader's blog. And there's a part 2 here that was released Sunday, and a part 1 just a bit earlier, 3 blogs below that, 3 posts below that says part 1. So that's first thing. So if you look through that, then trend lines are great for multiple things, for indicating chart patterns, for instance, but also in combination with fibs. So what I like to do is use basically trend lines as an indication which direction do I want to use fibs to. All right, let's take a look at, for instance, the pound odd here as an example. you see clear support or resistance trend line marking the tops, connecting the tops and connecting the bottoms. So at this point, do we want to use a fib that indicates bullishness or bearishness? Do I want to basically put a fib like this, and I see that price is respecting a 50, 61.8 fib zone, or do I want to put the fib from here to here? All right. Now, in some cases, the fib is very clear, and there's only one direction we want to fib towards. In other cases like this, we can put the fibs on both sides. And in this case, in some cases, it's worth taking the fib, a deeper fib anyhow. But if that already has happened, right, because price already has respected the 50 fib down in here and the 78.6 fib up in here, and the price is making a triangle like that, then the only thing really what we can do is wait for the breakout of these trend lines. And then if it is a bearish breakout, we leave this fib and look for price to move toward the targets. And if it's a bullish breakout, I would move the fib from here to here and look for the targets to the opposite direction, to the upside. All right, so that's how you can use basically the trendline breaks and the fib targets to know, what direction are we aiming for, and what could be also something to be cautious of if of course we get a confluence between retracements and targets. All right, because that's what we can do. We can leave this fib on, but we can still add this one, and we can see where the confluence is between the retracements and targets, like this. All right, that's for the downside. 172.50 and 171 roughly. If it's the upside break, what we would do is the opposite. We would leave this fib on, of course, for the targets, but we need a retracement fib. So in that case, we would need to take a look at the daily chart and put the fib on the most recent swing high, swing low, because on the 4-hour chart, we don't have it, and we need to put a fib from here to here, and try to look for basically confluence between the targets and retracements. If there is no confluence, then just keep an eye on these targets, or the first one actually that we bump into, which is the target in this case. All right, so that's how you can use fibs and trend lines. Basically, if you are not certain if a fib will be used, for instance, you can use trend lines for breaks. For instance, if we're looking at this $0 daily chart, and we had a fib from here to here. All right, but we're not sure that the 61.8 fib will be used. So we're a bit hesitant about trading the 61.8 fib. Then trend lines, offer a solution. All right, if we don't want to take this bounce, what we can do is take the break of the trend line, like this, for instance, take this break right here, or we can zoom into a 4-hour chart. All right, and we can zoom into a smaller piece of the price action and take this break, for instance. All right, and in that case, we're basically reducing the risk that if price is not using this fib, is not respecting this fib, then we won't be in that trade. But if it is respecting the fib, there's often a deep hook back here, as you can see, before we get a larger push up, before we get a bigger break. And in that case, if we wait for the trendline break, we're entering the trade we're waiting for the moment that price is already making a higher low in this case, plus it's then breaking resistance. So we're going for a higher high, and that's typically the moment where price makes a bigger momentum, either because it's making an ABC, and wave C are typically momentum if it is a zigzag, or it's a 1, 2, 3, and of course the wave 3 has a lot of momentum typically. All right, so that's just the way how you could have viewed a euro-dollar long right in here, or perhaps here. Now at this point, I think we're still looking at a bullish environment on the euro-dollar, because we're seeing bullish momentum, as you can see, the breakout with a lot of power, looking good this upside, good momentum candles, strong 4-hour candles, because the candles are sizable, the majority are bullish, and the bearish candles are small. And most recently, after this momentum, we actually see a small little consolidation zone right here. Do you see that? Just a tiny bit of a consolidation with small candles just going sideways. There is no bearish momentum to be found there. There are no sellers in that zone. Price is just waiting, passively correcting to the right, and you can see that price is already setting itself up for follow through to the upside. This is a typical kind of contracting triangle or consolidation zone that is indicating that the bulls are still in control, especially considering the strong momentum to the upside. When we have momentum to the upside like that, but the correction is passive and going sideways, and the moving average is actually catching up to it. Look, moving average is getting closer and closer, not because price is moving to it, but because the moving average is going to it. So that's a passive correction, and those are typical breakout scenarios for further upside continuation. Now, when we get to break, I'm not expecting a huge move up. There are a couple of things why I think the upside is going to have a limited movement. One of the things is basically this oscillator. The oscillator is already, one of these awesome oscillator, for instance, and the MACD that Nenet has made. We call it the ECS MACD because it's named after our website, Elite Currency ECS. And this MACD is showing a cross here of these two lines. It's indicating that it's in the red line, thick red histograms already. So typically when that happens, we are kind of looking at a potential more difficult zone, a zone where price could still make a push up, but could run into a divergence pattern pretty soon. Now, on top of that, if we add the daily chart, all right, and we look at, let me take this fib off, but we look at this fib. All right, there are a couple of things that we note on this time frame. First of all, or we can actually put the fib from here to here even, sorry, like that. All right, now why this fib? Because one thing we have to note is that we had a breakout of this trend line. All right, so we're looking at trend lines and fibs. So here we had a break. Now the breakout candle was not spectacular, pretty big wick. That's why we're probably seeing such a big retracement. But we got to be aware of this trend line and this breakout fib as well. And as long as price is below this top, right in here, I think it's still valid to keep this on and realize that this could easily be basically a hook back to resistance and a turnaround. We talked about this already for many times, I know. So I hope this is not repetitive. But still, the same thing is valid. Just want to be clear, as we talked about already in here, that I was already saying at that point, I wouldn't be surprised if we get a bigger hook back up to a deeper fib, and that's what we're getting. We're seeing it right now. That's still valid, and that's still on the table. Therefore, these fibs, like the 61.8 at 112.30 and the 78.6 fib at 113.50, are very clear resistance spots. So despite the fact that on a 4-hour chart, I think we're looking at a bullish breakout, yes, that's true, but be aware that on a daily chart, this could be a hook back to the trend line and fibs, and it could easily be resistance at these spots. We'll have divergence on the 4-hour chart, and that would be a spot, zones where I'll be looking for shorts and looking for turnarounds for downside. So yes, 4-hour, I'm looking for a bullish continuation, and I would be interested in trading that. But on a higher time frame, I would be, on the same token, looking for a few pips higher for shorts already. Now, honestly, I think the 78.6 fib looks a bit better now at this point, but it could be the 61.8 fib. It could be as shallow as that. It could be just such a small move up still remaining. All right, but for the moment, I'm leaning towards the 78.6 fib. And that's because looking at the fact that London session just started, we got a whole day of trading ahead of us. And I think that we'll probably see a slightly bigger upside than the 61.8. But let's see. We'll find out soon enough. Now, regarding the upside trade, how to trade it. So now, obviously, taking a position at the 38.2 fib would have been neat for instance, putting a fib like this to this right here and taking a look at this fib right here. Looking for a turnaround here would have been good. Now the price has already gone from that, so I don't think we're going to get that low anymore. At this point, I think the only way to trade it, if you're not in that trade at this point, if you are, that's great, and you're already up, and I think that you can just move it to below these bottoms and reduce the risk. If you're not, I think the only way to trade it is probably look for this 4-hour candle. The 4-hour candle here, I think, needs to close near the high, something like this, for instance, and then could be tradable right there at the candle close, or if the candle just makes a bit of a dip, and the stop loss could be probably below this bottom right here, or the candle low right there. Could be enough. There's always a bit of risk, of course, using a tight stop loss, but I think it makes sense. It's probably the best because, as I said, the upside could be limited, so you don't want to put the stop loss all the way below this bottom, for instance. That would not make sense. It's too big of a risk. I think that a tight stop loss is the only thing that could make sense here. Otherwise, there's just not enough reward potential. So yeah, I think that is the only way, looking for this 4-hour candle, because if this 4-hour candle closes bullish with a decent close into the high, then that signals the continuation, and we should see follow through at least a bit. All right, now if the next bar shoots up and it becomes a pin bar at the 61.8 fib, get out for plus 5 pips or whatever. Make sure risk is off the table at least, because that looks like a reversal, and that bullish breakout is seriously running into some struggles here. So, that's just already, me talking about some future developments here. If we get another bullish candle, or if it's not a pin bar, but it's like a bit of a wick, but still a bullish close, fine. I would just move the stop below the candle low, and I think, or just leave it at break even perhaps, and hope for the best and see that hopefully we'll get that immediate follow through. All right. So let's see how this one ends. I think it's still about just a bit less than 2 hours to go on this candle. So, that could be annoying. If the candle, however, dashes up all the way up to here at the 61.8, closes something like that, I think that fib is going to break. That's a strong candle. A momentum candle like that, even though the 61.8 fib is close by, will probably break. I'll still look for retracement though, about halfway up to this top, and then look for continuation higher. So that's basically my up and downside trade. I'll be looking for the same thing, candlestick patterns, preferably at the 78.6 fib too, for a reversal. There too, looking for bearish candlestick patterns. Poly-USD, I'm not interested too much in this. It's in a triangle, as I just talked about, and we got clear support and resistance. And at this point, basically, if we get a bullish break, I'm going to put the fib from here to here, and I will look for price to go up to these targets. If we probably don't get a rate hike, if we don't get a rate dip, if we do get a rate dip, I think we're going to break to the downside. In that case, I would put the fib from here to here, and I'll look for continuation trades, 2D targets, basically. That's all I want to mention at this point. That's basically the only thing I'm looking for. All right, dollar yen is more interesting because dollar yen is right at this support trend line, and basically it's at a bounce or break spot. Now your dollar looks like it's in a break spot, dollar weakness break spot, and the dollar yen is the same, but of course the yen factor could be different, and maybe the dollar weakens against the euro, but not maybe as much as the yen, or not at all. I do think that the dollar yen is in let's say the dollar yen is not as bearish as the euro dollar is bullish. I think it's a pretty strong support level. We got a trend line that I am very cautious of. We got a 61.8. That's an important level. So I think there could be a decent chance of a bounce. But, of course, if price breaks through this trend line and has a candle close, like this, with the majority of the candle pushing through that trend line, with the candle close near the low, with a decent sized candle, now that trend line is broken, and the same recipe for your dollar is valid, I think, for the dollar yen, but then in the opposite direction. A bit of retracement and continuation down to the next fib target at the 78.6 fib here at 100.70. Looks like a neat setup. In that case, this is a bear flag right here, bear flag. And a break of that bear flag should see follow through. This is a bear flag on the hourly chart, in fact, right there, or 30-minute chart, which means that if we get a break on this time frame, I think we'll see basically typically we'll see a smaller pattern on the 5-minute chart probably. That will give basically the pattern after the pattern, or the pattern after the break of the pattern, and those are typically the best, and we'll see most likely a follow through to the 78.6 fib if that pattern happens. Right? If that pattern doesn't happen, if we get a break like this and you get a close and reverse on the smaller time frame like this, then you want to be careful. But if you get the break and you see on the smaller time frame a triangle, rising wedge, or bear flag, it looks good for a move down to the 78.6 fib. So we got a question from Z10. If we're looking for a retracement, let's take this as an example. So let's say we get the break, we're looking for the retracement and a follow through. So Z10 is asking, do I use a limit order in this case? So there's no fixed rule for my side. It depends. Sometimes yes, sometimes no. I think for intraday trading, it is probably best not to, and probably best to look for the pattern. If we get the pattern, if you see the pattern occurring, then that changes things, and I think it is a better idea already, or it's has more sense to make a pending order, because then we already see a pattern occur, and then we can try to calculate at what point the turning spot could be. What we can do is build a trend line here and build a parallel trend line here, and try to pinpoint that spot right there. Or if we see a mini zigzag, look for the targets, for instance, there. And those pending orders make sense. You can still, of course, indeed just wait for the candle confirmation, in fact, at that point. But it makes sense. When the break just occurs, I wouldn't want to do it, because the thing is that it could be a close and reverse and a false break, and price could soar up like this, take me into the pending order, then start to make a bull flag, and I'm trapped. And that's a sticky situation. There's almost no right thing to do. The best thing is actually to get out for a small loss, but that's very difficult, because we're getting into a spot where we're hoping that actually some miracle happens and price still moves lower, and that was just a spike for more downside. And well, it could happen, but often it doesn't happen when we're in the trade, and it's kind of wishing for the best, and Murphy's Law says it won't happen at the time we need it. So that's already a sticky situation. So that's the problem with putting the pending order, I think, too early. And that's, I think, even valid for all time frames, in fact, but maybe even more so on lower time frames. On higher time frames, it's probably makes a bit more sense to use a pending order, because you're just looking at a larger structure, and I think that there could be reasons for a pending order when a breakout has occurred. If you got a strong weekly candle, a strong daily candle, and you're looking for retracement of that candle, that typically are good candles to use for such a pending order. All right, so yeah, that's basically the three majors. I got a lot of other stuff that I want to take a look at, in fact, but just a quick note regarding that, psychological point of view of when you're in a trade, for instance, like this, and you have a pending order and you see the momentum go against us. That's such a typical problems with entries and exits. I was looking with my wife at airplanes on Sunday, landing and taking off, and yeah, as you might know, it's always the most risky part, in fact, um, regarding flying, the takeoff and landing. And there are some similarities with trading. I think that obviously exits, I think, are even more dangerous than the entries. In fact, for trading, I'm not sure about flying, if that's the case, but in trading, I think it is. And it is very difficult to be flexible and very easy to regret something. And it just very easy triggers our kind of roller coaster emotions that we want to take revenge and etc. So, standing firmly in our shoes with exits, not regretting decisions, being flexible but not too panicky. That's the ideal. But oh boy, that is so difficult. And there's so many fears that go into that equation. And just like with any phobia, I guess. I mean, this is not trading is not a phobia, but just to give you kind of a comparison, any phobia, like for instance, fear of flying, anything you can think of, it's a constant battle of working on our weaknesses, right? It's making sure that we improve those things so that um, we are less vulnerable to that. If if our weakness in trading is not willing to give up on a trade, hanging into that trade too much, it's the only way we're going to improve is really working actively on improving that. If you have fear of flying, the only thing you can do is try to you know take a small flight, practice it yourself, go to the airport and see those airplanes fly. You know, listen to experts and try to work on it diligently and regularly. That's the only way you can do it. And so, just wanted to explain that those are that is the best way of improving that. Consistently working on those weaknesses. So yeah. All right. Let's take a look at some other pairs. We got a lot of good things to look at. Pound yen here, you see basically a channel moving to the downside. We had a lot of breaks of these trend lines to the downside, but price is reaching a 61.8 fib, and it's using that as a bouncing spot as we speak. All right, so I think that a pin bar like that could be a good thing to look for an upside back to the top of that channel. Now, in this case, I think I'm more inclined almost to let it ride out and look for a hook back here to get a bit of an inverse head and shoulders pattern. First, on a 15-minute chart, in fact, you can see that this was a false break, well, maybe a false break is, it depends how you look at it. It was a breakout, but it just you bumped into support, and that was, the reason why it moved up so much. And that's one of the reasons why you want to be careful with pending orders. If you put a pending order here, this is a perfect example. You got caught right in that trade, and you're hoping for the best at this point. And considering the momentum, I wouldn't be surprised if we see a bull flag here, and then after that, a break above the resistance and a break of the flag to the upside. So from my perspective, I think the pound yen makes most sense to look for the break, look for a pattern after the break, and then trade that next continuation trade to the upside. All right. Now, obviously, if price breaks above this channel, there could be a huge space up to the minus 272 target. But I think that really only can happen if we get after the news event on Thursday. We're looking at the pound. Don't forget, what could happen until Thursday is a move up to the channel. Why? Because that's just an equilibrium play. It is basically price staying in a range and it's moving back to its mean. It's moving back to its average. And that makes sense because I don't think there's going to be any decision made until Thursday. It could. I mean, who knows? It could break the channel, it could break the 61.8 fib and fly down like that, then I would certainly expect to bounce to 78.6 fib. But on average, I think the pound is not going to make a huge directional move, and it's going to be correcting up and down. And I think there's a good chance from this psychological, market psychological point of view, that it's just basically going to rebound back and stay within this basically channel. All right, so that is pound yen. Euro yen is at support trend line as well. Here, just like the dollar yen, it could be at a bouncing spot. So I think it's going to ride on the dollar yen and the euro dollar, obviously. Could be at a good bouncing spot too. And I think that makes sense as well. And we're looking at a lot of candles here, not able to break this bottom. Just thinking how it could be best to trade the euro yen or pound yen. Let's take a quick look at the euro pound. We have a break of the euro pound. We have a break of 84.25. That is important. Slow, but there is a break. So I think the euro yen looks a bit better for the moment. As long as price stays above 83.50, any pullback, any move down could still be a pullback. And we're seeing a break of resistance. So this could be the start of a push up to those targets when we use this as a fib. All right, fib, trend lines, break of trend line, fib is the target is the next move we should expect. So from that point of view, euro yen could be a bit better. What I would like to see is dollar yen actually bouncing off this trend line, because for the moment it doesn't look like it's doing that. And I would like to see euro dollar close with the bullish candle. If we get dollar yen, if this is a doji and the euro dollar is a strong bullish candle, the pound yen should look good as well, in fact. Sorry, not the pound yen, euro yen, sorry. All right, so a bullish candle, something like this, for instance, on the euro yen would be good. That would be perfect. Bit of retracement of that candle. I think that could be an interesting along with the stop loss below the candle. Targeting a safe target would be right here at 116. More aggressive target could be the top of the triangle around 117. And when one of these two trend lines breaks, that's when we can use fibs. We can put fib from here to here, look for the target at 121, 50 fib bounce, as you can see. Or if it breaks to the downside, I would flip the fib around and we'll look for the minus 272 target on the other side, flip it here from top to bottom, and we'll see, well, not really a hit, kind of halfway. That doesn't happen too often, but the target, still the minus 272 target at 106. All right, let's move on. Aussie. Aussie had a rate, not hike, rate cut, and saw price falling pretty strongly. I talked about, the potential of price to make a retracement and bounce, and it is kind of doing it. It retraced deeper because of the news event, but it is bouncing as we speak, using the support trend line, and it is in a triangle too. And the triangle is really becoming quite tight. But on a 4-hour chart, there is still enough space to make a move up. So perhaps you took the short or were daring enough to take the long after a reaction like this. That could have been risky though, so I don't think many of us did that, and justly so. At this point, I think probably the 4-hour candle, if it closes like this, that would be a good signal. Again, same recipe I would use, probably 4-hour candle confirmation for a move up to the targets here at 75.75 and 76.50. All right, dollar CAD looks bearish too. You can see, for instance, here the break of this channel and the pullback to the 50 fib, and then the move straight down to the minus 61 point target. Classical, ABC zigzag, break, pullback. continuation. And that's how, great trend lines and fibs work out. Trend line break, pull back to fib, move down to fib target. Great harmony there. And this seems to be another lower high. I wouldn't be surprised. All right, so dollar weakness basically. So I'm not sure if it's best to trade it against the cat, but it's the same story here. All right, Euro odd 2 had a break. Talked about the potential bounce off this support trend line. And this was a hook back. Failure to break this bottom. Hook back, break of the trend line. So this is how you can use trend lines in multiple ways, right? The bounce, this is not something that I would trade, but the hook back, the bounce, and the follow through breakout, those are things that make sense. All right, Asim, I just see your question right now. In fact, we'll take a look at the dollar yen in again just a second. Let me just finish this this wrap up or summary of the other currency pairs. Let's see, pound odd, for instance. Here too, this one I would not be really interested in trading. This is a small triangle, and any break of the triangle I think will not go far, considering the pound news event. So, not too interested in that. Euro New Zealand is breaking these support trend lines and is respecting this channel to the downside. So yeah, in this case, I think a bit of a pullback into these tops here could be interesting for a turnaround. Could be New Zealand strength. All right, I don't want to be repetitive, so forgive me for that. But here too, I think a 4-hour candle is important. And 4-hour candles are I would say always useful, but I would argue even more so at the beginning of London, at the beginning of the European session, because of the fact that you have basically a quiet Asian session that awakens slowly but surely. The yen pairs do some movement in the second part of the yen session often, or the yen, I should say, a Tokyo session. Some pairs are asleep, going sideways. And this is the first attempt for price to make kind of a breakout up and down. So looking at the 4-hour candle and looking at how it closes kind of gives us valuable information about that first part and whether there's anything significant that we can say about it. Is it just random breaks that just indicate choppiness? Or is there a serious kind of breakout direction that we can read from it? And if this candle closes bearish with a strong candle close, that says a lot. And that says that the bearishness has a good chance of follow through. Whereas if this is a wick and the candle is a doji, to me, that does not spell good news for the downside. In fact, we might see more indecision or perhaps even a passive break of this trend line. Whereas, of course, if it's a bullish candle like this with a big wick at the bottom, right, like this candle. Wait, let me do that again. Like this. Well, that, of course, reads that has an opposite indication. That could mean a very good chance of a bullish breakout. All right, so again, made it to the target, minus 61.8 target, choppy downside, but eventually did make it. Broke the minus 61.8 target. You can see, made a bit of a flag here and then broke that flag for a pretty decent move down to the 77. So that's something we talked about. What else can we look at? I think Oh yeah, the Odd New Zealand, of course. Odd New Zealand broke this triangle we talked about as well, and you can see break of the triangle. What are we looking for? We're looking for price to go to these fibs, or you can use or you can use, of course, this fib as a zigzag. Look for price to get down to these targets, right? So one way of trading that is right in here, for instance, with these trend line, these candles pushing below that trend line. The second time, those are always the best, right here. Or to trade the hook back after the bigger break, or the breakout after the hook back. There are a lot of ways of trading it. This is the first break, this is a pullback, but if you're not sure if this is a pullback for downside or for a bigger reversal up, let's zoom into the 15. And you can use trend lines for that. Now, this is not the best of trend line, but something like that, for instance. Right? There you go. These two candles are the breakout candles. And that makes a lot of sense because you got bearish candles here, you got a small correction here, and these candles are already pushing through. That's typical for an ABC or a 1, 2, 3, and those are one of the best ways to trade it. That's basically when I'm trading my our harp system that Nennet and I have developed. This is at its core basically what the setups we're looking for, right here, right there. Now, that could be maybe, if you're not trained for looking for that, it might be difficult to spot that. But this is basically the core kind of principle, looking for that third or the next move and the start of that next move. All right, so that's an excellent example of a 50-minute continuation, and all of that based on the break, the expected pullback, and the potential continuation, but we're not sure if it is a continuation, of course. But if we take it early enough, it doesn't matter, because even if it bounces here, we can still grab profit before it does that, if it makes a bigger bounce. All right, if we're confident in a bigger push down and we see a good hourly candle like that, then we can try to survive this small little pullback and wait for the bigger run down to the minus 61.8 target. So that's how you can use trend lines even after that. We have a break of the triangle here. We're looking for a move down to these targets, right? So you get the first move, but is there a second move? Well, then again, you can use this trend line, right? This was the first trend line we used for the first break. This is a mini trend line to wait for the second break for the second push down to the next target. And I think that trend line makes sense because this is a pretty aggressive upside. As you remember, I like to take the pattern after the pattern. This is a pattern, right? This is a big 4-hour or 1-hour pattern. So we're looking for a smaller pattern. Patterns that I like the most are concentric triangles, bear flags. This is a pretty steep correction. So there's very good reasons to be skeptical about further shorts. So trend lines or bigger consolidations like this would indicate this is kind of a bearish, how do you say it, descending wedge, right? This trend line break or this break of the descending wedge would be ways to trade the continuation down to the next target. All right. All right, DAX at resistance, bounce or break spot, and looks like a bounce. Looking at this daily candle, would expect follow through to the downside for today, and I would say at least a move back to these moving averages and a psychological level of 10,000, and probably some support levels here as well. Oil had a bearish month last July, very bearish in fact. That looks like a continuation downwards. Based on this candle, I think we should see bearish continuation down to 37 or 33 even. And we should see price break through this 50 fib on the weekly, on the daily, strong daily candle, strong 4-hour candle, strong trend, strong momentum. So basically, this is looking like a flag. So there are a couple of things we can look for: is a break of this flag that should see continuation down on oil, or if we get a retracement and we get a bear flag and you see price hesitating at 40, this bottom, the 38.2 fib, making a bear flag like that, that could be the turnaround as well. Gold, personally, I expect a slight more upside to 1400 at the minimum, but let's take a look again here. Let's see. Yeah, 14, 1410. I would expect one more push up here. There's a lot of momentum in this chart. And I'm expecting a higher high on a gold. Now, how far? I'm not sure. This could be the fifth push of a fifth push, so that's why I don't think it necessarily has to go too far. And if it does struggle here, then in that case, I think we could see a bigger ABC pullback before we see more upside. All right, in that case, this could be one more push up, but we could see maybe a move back down to retest these bottoms before I think a bigger upside could occur. In that case, putting a fib from here to here and looking for the 50 fib, for instance, or the 61.8 fib before price makes a pretty strong rally, I would say, up to these targets. That could be substantial upside potential there and an interesting move up. Now, let's see. It depends if it struggles here or not. If it does, I think that could be a decent opportunity and most likely development. Silver, probably the same. Let's see how it looks bullish up to 2250, 272 target. But it could then start a retracement back to 20. Shallow retracement probably before price still continues higher. The environment is different. We're in a bullish environment, bullish momentum. We've broken all the resistance. And I think we're looking at, silver is even looking more bullish than gold at this point. Recent momentum, at least. And I think that we got a good space to the upside. On the 4-hour chart, how to trade. I don't trade it, but if I, sometimes, but not regularly. And the best trade obviously was this candle, this breakout candle, this resistance trend line. Beautiful candle. Got good follow through at this point. And after this break of this trend line, you see another pattern here, a zigzag pattern, right here, ABC zigzag. So, those are all just ways how you can trade bounces at the targets here for follow through. All right. Then another breakout, and we're seeing perhaps a breakout right now, actually, as we speak, smaller breakout of this falling wedge. All right, that breakout already has occurred, and price is pushing up from 20, this breakout candle here at 20.48, and price is already up from that level and moving higher. We got a channel like this, and that's a break to the upside. All right, so 4-hour candle that's bullish like this, if you're not in that trade and you want to trade it, then probably what I would be doing is looking at this candle. If it closes that well, small retracement, and we should see follow through. The pattern of the pattern could be good too. So 50-minute chart, and on the 50-minute chart, this is a pattern. So we should see a pattern on the 5-minute chart as well. Intraday trading, this should rise, hit some resistance, make a mini bull flag, and break again, and we should see follow through. All right, because this is a 50-minute pattern, and it looks like a good break on the 15. So I think we'll see a pattern of the pattern on the 5 and follow through on the 5. Now, eventually, of course, there's going to be divergence between 5-minute tops, and there's going to be a bigger retracement. But I don't think if we get a good breakout and it looks like we are, I don't think that will happen soon. It could take a while, and that might be a lot further in the future. That might not be even today. All right, so S&P, good monthly candle above these tops. Looks like price is in the breakout. Let's see if it can make a retracement down to these X-resistance spots. FTSE is a bit different because it's a doji and still way below these resistance spots. So that looks like it's struggling with that resistance. Dollar index, bearish candle, bearish engulfing twins. Looks like the dollar is going to have some struggle. And we can see on the dollar index Y. All right, so let's go back to the dollar yen. And if you have any questions, feel free to ask me. And if you want to take a look at a specific currency pair, specific time frame, also please feel free to let me know. Dollar yen is pushing as we speak, in fact. So something like this basically is what I'm looking for here. Candle close, preferably more than 50% of this candle below this trend line. So I would like this candle to be a tad bigger, a tad larger, and with a candle close near the low. And then I got a good breakout candle, a bearish breakout candle, and it could be worth trading right there. But I think it would make sense to look for retracement back to that halfway mark of the candle, back to the trend line, or on a 5-minute chart, basically. Makes sense to look for probably dip lower, a bit lower like this, and it makes sense to look for kind of a bear flag and break of that bear flag return. All right, so that is the dollar yen. I think that is certainly looking bearish at this moment, and it depends. If we're going to have a bearish close, it probably is. If we have a bullish close or doji, what probably happened is a break and a close in reverse and price is back in here. That is not something I want to short. That's not something I find interesting. All right, so in that case, I gladly skip this trade to the downside. Remember, we're looking for setups with decent potential here. We're not, I played laser game on Friday. I don't know. Does anyone know what laser game is? It's a game where you're in a let's say smaller room. Well, it's a decent size, about 300 square meters, right? And it's dark. You got all kind of lights shining. Making it's not completely dark, but it's on the darker side with some smaller lights here and there. And you got this. You have basically a fake gun in your hands that's shooting fake lasers. Right? It's just it's a game. It's for fun, and you have a body patch. Body sensors basically, so that when the laser goes into that patch that you have on your body, it registers that, and you're hit. So that means that you get minus points for that. So, but if you do that to another player, you get plus points, right? So it's all about hitting the most of your opponents while getting the least hit by your opponents, right? And typically you play the team, you got teammates, they're trying to do the same, and whoever has the most points as a team wins and beats the other team. Now there are in fact 3 teams we had. So, and it was funny because last time I played, I really had a great accuracy rate, always on the highest side. And the first time I played Friday, I had a horrible accuracy rate. I was shooting like crazy, but I missed everything somehow. I don't know why, but it was a horrible rate. And it really made me annoyed, and it just, all these strings of losses just, strings of being hit without getting really much in return was frustrating. And it reminded me of trading, how a string of losses really can just put you down psychologically, and that's why it's good to keep a mental eye, an eye on your mental state as well. When you're looking at take profits, when you're looking at a trading plan, what is your mental state at this point? Because if you are in a mini series or in a mini drawdown or even in a big drawdown, you might want to be a bit more conservative if you take profit. You might want to not aim for a home run, actually. Although it's tempting to hit for the home run because you want to quickly gain ground and quickly get back to where you were, right? But it could be a lot more important to get a win a win on your scoreboard, get back on your feet, get a positive attitude, get that first win back on so that you have faith in another win, and that could actually snowball into a better feeling. And at that point, then you're ready for maybe a more aggressive take profit, aiming for something bigger and getting that home run. Often, the worst thing you can do is aiming for a home run when you're in a down streak, because you're not going to get it. You're not going to give up on a trade until you get it, and this is only going to throw you deeper into a hole because you're going to get another loss and another loss, and you're just aiming for the home run that relieves you of that pain. And because of your psychological state, my psychological state, it's not going to happen. So I think the best way to combat that is actually taking smaller wins. And I just noticed that it's not only in trading, but it's in laser gaming too. Has anyone done laser gaming by any chance? If you haven't, try it out. It's really so much fun. Take some friends. It's just a good time. Don't take it too serious though. I mean, it's really, folks, it's just for fun. Some people take it so seriously, just have fun with it. And the funny thing was, when I did that, I took my own advice and I, started to focus on small wins, started to please, be more focused, be less dramatic. I was more actually focused on a smaller section of the field. I totally wiped out that bad score and made a decent score. I wasn't, as good as last time. That I didn't manage anymore. But after playing 3 matches, I didn't do as bad as I started, and I recovered, and I ended up being like 3rd out of 12, which was, on average, not as bad as it seemed. So, anyhow, I guess no one has played, no responses, but yeah, it's something that, as you can see, you can learn from unexpected corners and places, and it's just something I really thought was a good parallel. So be careful of that. If you notice that you're pushing yourself for a big win because you got the feeling you need to compensate, red flag, warning lights should be blinking, and you might want to do the exact opposite of that. Not too small of a win, but go rather probably for that conservative win. Unless your always circumstances, unless you really have good analysis and you want to go for a bigger win because you really think that this could be a big upside. There are some exceptions. You might want to split the trade, etc., etc. So anyhow, no, I'm not entering now. I'm waiting for this breakout candle to finish. That still requires 1 hour 10 minutes. And if it closes like this, then that could be a trade. But preferably, I would probably look for a bear flag on the smaller time frame. That is, like the 15 or 5, and then trade it. Put the fib on the candle, like this. Look for a pullback to 102, and look for a stop loss above 102.54. Look for a continuation down to 100.70. Well, 100.80, I should say. 100.80 because 75 is a 3/4 level. So hopefully that's clear. If not, let me know. And this is my trading plan. Now, some traders might be annoyed and they want an immediate entry right here, right now, but that's just not the type of trader I am. I always like to build a plan instead of just kind of jump in there. I like candlestick confirmations. I'm a big fan of those, and I know that not everyone can do that, so that's why sometimes I try to give pending orders too. But this moment, I think that oh yeah, pending order. Well, yeah, 78.6 fib, 113.15. I mean, if there's any pending order, I would be comfortable with that, with a stop loss above this top, or the 88.6 fib. But that's of course always risky. If you put the stop loss in the fib zone, that's always a risk. Tops are always the invalidation spot. Yeah, no problem, SM. So hopefully this trade will work out. And once again, just to be clear, if this is a wick and ends up with more than 30% wick, all right, just want to be crystal clear here. If this is more than 30% of this candle's wick on the bottom, I'm not taking that trade. If it is a pin bar and it ends up like this, I will be looking for upside, in fact. So there's a lot riding on this candle. It could be an entry to the downside, nothing, or maybe even, doesn't seem likely, but even upside. So that's valid for euro dollar and dollar yen. In fact, those look like the best setups of today. And then both on the euro dollar and dollar yen, we could see bounces at the 78.6 fib. Euro dollar looks a bit better though than the dollar yen, but both have that same structure. Euro yen, I think could be a good bounce to the upside, but let's see. It's not bouncing as yet, so those look like the best setups. Otherwise, I don't think. I was looking at something else. I was looking at Euro New Zealand, I think. Yes, Euro New Zealand could be good too, because New Zealand is looking pretty strong. So those two could be interesting as well. And otherwise, oh yeah, the pound yen, but pound yen is not bouncing. It's actually moving lower, so not yet in any case. I think that as far as I remember, that was probably the most interesting things for today. I would say the Euro New Zealand dollar, Euro dollar, dollar yen, and perhaps a Euro yen, bounce, but doesn't look like that's happening at this point. So, all right, folks. Well, let's see how that market has developed. Tomorrow we'll take a look at these ideas I have, and let's see if they work out. We never know. We'll find out tomorrow. Hopefully, by then we'll know. Strategy webinar. We'll take a look at momentum and correction. Then it takes a look at naked scalping part 2. And Thursday, we take a look at trading with Renko bars. That's with me too. It's a mistake there. Let's see. There seems to be some error in these webinars because I'm hosting these as well. I don't know what went wrong. Anyhow, doesn't matter. I'll check that out later on. But hope to see you in those webinars on Wednesday and Thursday. And wish you good trading. Cheers, folks.